Okay, so let's have a look at the second part of the income and expenditure account for 2019 Crest Wood. So we're going to look at the payments. So we looked at the receipts, now we're going to look at the payments for expenditure. It's the same again, we're going to work down through each one of these and make any adjustments if you need to, and then put them into the expenditure account. So the balance has been looked at already as part of our accumulated fund. Bar purchase has been used already as part of our bar trading account. Catering purchases has been used already as part of our catering receipts. So the first item we have is purchase of equipment. So we know in our profit and loss account we put our depreciation. So the same with this here, we're going to do working on our equipment, and also not to forget about our buildings as well. We need to find the depreciation for that. So that's going to be our next working. So our purchases at the start of the year, our equipment at the start of the year is 26,000. We bought more equipment on the 1st of the 4th. Now be careful of that, because we bought on the 1st of the 4th, we only have the 4th, 5th, 6th, 7th, 8th. We only have 9 months depreciation on that, and 15,000. So our working is going to be 26,000 by 20%, because that's what's telling us in the question for depreciation. So we look into the question. We also used it when we adjusted our buildings at the start of the year. So rate of 20%. So equipment owned on the 31st of 12, 2018 is to be depreciated at a rate of 20% of cost per annum. So we bought 26,000 by 20% would give us 5,200. Our additional equipment that we bought is 15,000. That's also going to be multiplied by 20%, but we're only going to multiply by 9/12 because we only had it for 9 months. So that's going to give us 2,250. So we add 5,200, 2,250 to get the expense for this year. So that's going to be 7,450. Now, just to keep the adjustment for our balance sheet, just to find out what figures for our equipment, it's going to be 26,000 plus 15,000. So those two are going to be added together to get 41,000. And then your cumulative depreciation, then we have 11,000 at the start of the year. So remember the adjustment we did at the very start of the year for cumulative fund. We have 11,000. So the cumulative depreciation for our equipment is 10,400. So in part 1, we were working 10,400. So 10,400 plus our 7,450 will give us 17,850, and that's the figure then that's going to go into your balance sheet. So 3 figures we've calculated: the expense for profit and loss or the income expenditure, the cost of our equipment for the balance sheet as a fixed asset, and the accumulated depreciation for the balance sheet as a fixed asset. So the item we need here for income expenditure is this 7,400. So we're going to put that into our income and expenditure. $7,450. So equipment then is going to be 7,450. Then we have to do the same for buildings. So remember, buildings, the depreciation for buildings is 2% of cost. So you didn't buy any extra buildings. So buildings from the question are clubhouse and course is 550,000. So our working is going to be 550,000 multiplied by 2%. It's going to give you 11,000. So that's going to go into your income and expenditure. That's your expense for the year. 550,000 is going to be the figure for your fixed assets in the balance sheet. And then we also have depreciation at the start of the year of 22,000. We're going to add 11,000, which is this year's depreciation, to give us 33,000, and that goes into your balance sheet in your accumulated depreciation. So same as the previous adjustment, 3 figures: the fixed asset, the expense for this year, and then the accumulated depreciation. So this 11,000 then into our buildings in the income expenditure. And then we work down through each one again. So we've got sundry expenses, 81,500. So small little expenses that are not enough to make one account. So that just goes straight in. Then we have coaching expenses of 5,600. Sometimes with these, with sundry expenses and coaching expenses, just have a look down and see if there are any adjustments to it. So just scan down along. You see here, wages due on the 1st of the 1st was owed to a club coach. Provide a further 2,500 wages on the 31st of 12th, 2018. So we're going to do a working for that, just to adjust our coaching figure. And for our coaching wages, we're going to take the figure from the question itself. For coaching is 5,600. We've got our wages due from the start, so 1,640. We're going to take that away, and the reason for that is it says wages due on the 1st of the 1st, 2018 were for owed to the club coach. It says wages due for the previous year, so you need to take that away. So we're going to get 1,640, we're going to take it away, and then we have to provide for further 250 wages due on the 31st of the 12th, so that's for this year, so you need to add that on. So 2,250. Our expense for income expenditure is 6,460, and this 2,500, that's going to go into your balance sheet as a current liability because we bought. So this 6,460 goes into your income expenditure account. And then as we work down, go to the bank loan, we also need to include the interest. So if we're working done on that, so we'll go back and have a look at our working, see how much we need to include. So back up to working 4 and the loan interest. We've got this expense I had, current liabilities beside that 250. That's actually the expense for the year. So we've paid off all our interest. There won't be any interest due. So we're not going to put anything into our current liabilities. We want to put it into our income and expenditure, that 250, because we have the interest paid off by the 5th month, as outlined in the question. So we look at the question for our interest, or for our interest here. It's 18-month interest per annum paid, so it's paid in the 1st to the 5th, so you don't have any interest due to pay that. So the figure we put in for our interest is going to be this 250. So that's all our expenses put in, so we're going to add these up. So we got our total expenses, and we're going to take them away from our total income. So 65,180. That's our surplus. That's a surplus and a surplus income over expenditure. So make sure you put that in as well. Remarks going for that. Okay, if it's a deficit, it'd be deficit expenditure over income. So that's part C. I think it is completed. Your income and expenditure account. Or sorry, part B, your income and expenditure account. And now we're going to move on to part C.